Oops, I'm getting the pinging. Hi, everybody. I got the pinging coming in on the. There we go. Okay, can everybody hear me all right? Okay, good. All right, we're going to kind of go through the rhetorical session of using stop losses. It's not that loud. How about that? Is that any better? All right. Okay, there's just some very simple functions of stop losses and how to use them with candlestick analysis. So usually what I do is I don't know how to take the ping out. Yeah, does somebody know what button to hit to get rid of the ping? I know you have to go up to that gear looking thing up in the top right. And somewhere as you scroll down to audio, let's see, interest notice, private messaging, any new chat message. Unclick that. All right, I wonder if that works. Yep, apparently not. No. All right. It's on our end. Okay, it's on my end. Let me try it again. Okay, I'm going to room settings. I'm going down to audio, I think. Yeah, I think it's enough to drive. Unclick, uh, unclick them all. All right, let's see if that works. Nah, unclicked them all. That's not on my end. All right. Okay, well, I'm getting the pings, so the only thing I can do is turn down my, I don't know what the answer is for everybody else. That makes you want to shoot your grandmother. Yeah, I can't get rid of it. Man. All right. Okay, there's the notification there to click on the gear up in the right, and then scroll down and unmark your audio notifications. Okay, so I've got my sound off, and see, I don't have one that says turn off audio notifications. It's got a bunch of them. anyways, we'll get started. Then hit save. Nope, more pings. All right, good. Okay, stop losses. So the first rhetorical question is, what is the function of stop losses? Well, most people answer that it's basically to protect your capital from taking big losses, and that's usually the primary result of the primary expectation of stop losses. But there's another aspect to it, that with knowing what the candlestick signals are showing you, you get a very high, I want to say, mental discipline by maintaining your mental control, which means if you look at a chart and you can see where the another crook to steal your money. If you can see where the trading should not be after a candlestick signal or pattern, then you shouldn't be in that trade. Close out the trade. What happens, and I'll do my own experience, I'll look at a chart and say, man, this looks like a good one. And it starts moving in the direction it should, and then all of a sudden it reverses. I sit there and think, oh, well, it was doing what it's supposed to. Maybe this is just a pullback, and I need to let it see what it's going to do. Well, the whole problem with that mentality is you already saw what it's going to do. It's not going to do what you expected it to do coming out of that signal or pattern. So if you stop out on something, do a stop loss on an area that you shouldn't be in, first of all, it keeps you mentally clear, and it frees up those funds to put right back into something that's going to be heading in the right direction. That the one you just picked isn't heading in the right direction. So this is the that process that everybody says, cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Well, with candlestick analysis, if you know what should be happening after a signal or pattern, then you know what shouldn't be happening, and if it's doing what it shouldn't be doing, you close it out. Now, the one big thing that helped me take quick losses or get out of bad trades was, whoops, I skipped one here, didn't I? That I kind of expect that 70% of my trades are going to be positive. Doesn't necessarily mean it's going to be any more than 0.3%, and some are going to be 300%, but I expect about 2 out of every 3 trades that I make based upon candlestick signals are going to be positive, which also means I had to mentally put into my head that also 1/3 of the trades I'm going to make are going to be losers. Now, once I came to that rationalization, then I took all the emotions out of my trading and said, oh, I analyzed this trade and it's going to be a good one. Oh, it's not doing what it's supposed to. Should I hang on to it because it might be doing what it's supposed to? It just needs more time. Now I can say to myself, whoops, this is a trade that didn't work. Get out of it as fast as possible and go on to something else. Now, the benefits as we go into some of our other strategy is that we're looking for things as far as our entry and exit strategies where we can cut that 30% maybe down to 28.2%. Obviously, the smaller we make this number, the higher the probability we're going to be in a positive trade. So candlestick signals provide us a major benefit. First of all, it gives us high probability entrance strategies. Tells us what we should be doing based upon what a signal is telling us to do. And then it also gives us logical stop loss procedures. So if I'm looking at a buy signal that looks great, stochastic started to curl up, and I was buying because it confirmed this signal up above the T line. If it opens and closes back below that candle and below the T line, What's it tell me about this signal? It didn't work. Close it out and move on to something else. Now, a lot of people get stuck in a losing trade, and that's human nature. That's why most people don't make a lot of money when they're trading, is because what's the first thing that happens if you're in a trade and it starts going against you? What's your first thought process? And I'm just speaking from my own experience. Boy, if this got back up to where I bought it, I'm going to get back out. I just want to break even. Well, the problem with that type of strategy is it may never get back up to where you bought it. You've got to be able to tell yourself, I got into a bad trade. It didn't do what I expected it to do. Close it back out. Where would be a logical place to close this back out? Obviously back below the previous candle, but the Japanese rice traders have a very simple strategy. And that's basically that if there's a candlestick buy signal confirmed, if they're able to close it back below the halfway point of that candle that told you the bulls are in control, the bears are still in control. Get back out of that situation. Bigalow, I think you can go to the top of your screen and there's boxes that show arrows to the out and arrows to the in. Click the arrows to the out. That should maximize your screen. Are you suggesting a stop loss that will be triggered automatically, or do you do it manually, hit the button? I've been stopped out many times just to see the stock take off as soon as I was out. Jim, that is all part of the process. I mean, say part of the process. That's part of the playing field. Now, if you put your stop too close, yeah, that may just have been normal fluctuation. Okay, Bugel, Jason's kind of the halfway point of the candle, not the full range, just the candle. Remember, the most important aspect of candlestick analysis is the two major decisions. Where did they open it and where did they close it? Anything beyond that is just the trading range. So the Japanese rice traders use the open and close as very important information. If this is the candle that told you the bulls are in control, and 2 days later the bears were able to close it back below the halfway point of the candle that told us the bulls were in control, the bears are still in control. Close out the position. So anytime you look at a trade, you've got to ask yourself rhetorically, why are you buying? Because candlestick signals and patterns provide expectations of what should be happening. And then after those expectations, you should be looking for confirmation of that signal. Richard, yes, during the trading day, you don't necessarily stop out if it comes back down below the halfway point. It's where it closes, because there's going to be quite a few times, and I'll bring some up here in a little bit. Once we get done with the PowerPoint slides that have all the information, we're going to go to live slides, and I will use the live cattle illustration to show why you wait till the end of the day. So basically you ask yourself, why am I buying? Well, stochastics are in the oversold area. We've got a hammer, we got bullish confirmation. What should we be expecting after this? We should be expecting bullish trading. But after 2 days, if they can close it more than halfway down this candle and below the T line, what did it tell us about our expectation? That it's not going in that direction. Close out the trade. So if you can set in your mind, I hope this has a result. Oh, so once it closed back here, notice what it did. It didn't do anything. It tied up your money if you sat in it for another week and a half before So you close it out, just wait for the next buy signal. Why are you buying? Because you're coming up above the T line, you're expecting this to trade positive, which it did. But then it closes back down here. If it opens lower the next day, what's it telling you about your expectation? It's not there. Close out the trade. And this all comes back to the simple rules of what do you do after a doji or an indecisive day? The doji rule is very simple. If you see where there's a resistance level and we know what should expect, if we were long and there was a doji and they gapped it down the next day at a kind of a resistance level, that's our simple doji rule. It's going to move in the direction of how they open it. Close out the position. So there's two factors that you want to kind of build into your stop loss discipline. One is each signal and pattern, I guess that's two. Each signal has some simple rules of what should happen to confirm that signal. Like the doji has a simple rules that it's probably going to move in the direction of how they open it after a doji. Most of the signals get confirmed by trading positive the next day. So essentially, when we look at something like a doji rule and it does the opposite, get out of it, because that's telling you something different has happened in that trade. So if we have our expectations of a trade, okay, I don't know if Bigalow, something's wrong somewhere. But if we know what our expectations are, we know what to do when those expectations aren't met. If this is a nice bullish pattern and all of a sudden they gap it down here, a lot of people say, well, what should we do now? Well, the answer is very simple. If you were buying this based on the bullish move and they had enough strength to gap this down well below everything, that's not doing what you wanted it to do. It is harder than all get out to be in a nice trade and then they gap it down, take away all your profits, and maybe even put you in a loss. And what's our first inclination? Oh boy, let's see if it's going to come back up. You got to realize the price moves are based upon human nature. And when you see a dramatic change of human nature, there's only one thing you want to do. Close it out, take your licks, and move on to something where you've got the potential of something like this. And that was, and I say this with a little bit of empathy, because this was the hardest part for me to get. Again, it's when you're fighting your own emotions, even when you're looking at something that tells you exactly what your emotions should be going against, it's still hard because you always have the what ifs. So if you were short this one and then you gap it up the next day and start trading positive, I used to sit there and think, oh man, maybe this is a mistake and they're still taking it down. Now I know at least to close out the position because something is wrong if I was short. If using a trailing stop, where do you like to set your stop? No. Percentages mean nothing. The market doesn't give a hoot where you bought or where you want to sell. So whether it's 3%, 6%, 10%, 15%, it doesn't mean a hill of beans. You look at the chart and say, all right, if I'm long here, where's a spot that tells me I shouldn't be in this trade anymore? Well, maybe more than halfway down this candle, which would also put me back in here. Now, that might be a 17% move. That might be a 2% move. It doesn't matter. Each chart is going to have a different element or a different value as far as where would the sellers be taking control. So if I'm in a long position and I'm in the overbought condition, I've got a very simple trailing stop. I put my stop at the previous day's open, because if there's enough strength for them to bring it back down through the previous day's open, especially in the overbought condition, that means the bears are in control. Get out of it right away. then should you take half a position off the first day to confirm the buy signal, then buy the other half on a positive during the next day? Should you take a half position? Richard, that's up to you. Sometimes I'll take a half a position if I see things are acting very well, but they may not be completely confirming yet, with the idea that I'm better off coming back out of a half a position that isn't working. And there's a lot of times that I would rather wait to have the trade confirm versus trying to get in a little bit early, because I'm not trying to maximize my profitability on every trade. I'm trying to maximize my profitability for the account, which means I want to get into situations where the probabilities are greatly in my favor that I'm moving in the right direction. So anytime I can start eliminating the possibility that the trade's not going to work, the higher the probability the trade will work. I'd rather make less on many, many more profitable trades than having a few trades a little bit more profitable, but the trades that didn't work were less profitable. If you can consistently stay in profitable trades, the compounding effect will be much greater than trying to get more profitability from each trade. Roberto, the option strategy is nothing more than if you're looking at a chart and you're saying, all right, how am I going to buy this chart? Meaning, am I going to buy stock? Am I going to buy stock on margin? Am I going to buy options? It's all based on the analysis of the chart. Options are just a method for buying that stock or having a position in that stock. So if this chart turns sour and the stock chart said, it's time to be out, that means it's time to be out of the options. Now, somebody was commenting on that today in either the option trading room or the regular room, saying, well, yeah, if it goes against you, that percentage swing is going to be a little bit greater than if you were in the stock. And that's true. The reason you were buying the options in the first place was that if that trade was going with you, the percentage returns were going to be a heck of a lot greater using the options. So that, again, the playing field. So options don't have stops. The stops come from if you're stopping out of a stock or would be stopping out, that's when you close the option. Okay, so what am I doing here? So what's our biggest fear about placing a stop loss, which somebody just mentioned earlier, is they stop you out and then they turn around and head back up. Well, I was the same way years ago, that if they stopped me out and turned around and headed back up, my first thought was that they're not going to fool me and get me back in so they can stop me back out again. But now we can at least see what's happening with investor sentiment. There are times when you stop out of a trade, and there's other times when you buy back in based upon knowing what the chart pattern is telling us versus what the what you think somebody out there is doing to you specifically by stopping you out or coming down and hitting you. You got to remember. Now, if I'm in a trade and I've got 1,000, 3,000, 5,000 shares of something, and they're trading 2.2 million shares each day, they're not going to move 450,000 shares of stock down to the level where they can pick off my 2,000 shares and take it back up. Remember, the market is going to move in the direction of what's going on between the buyers and the sellers. If they have enough strength to have all that selling come back and stop you out, you should be stopped out where the chart says you should be stopped out. Now, are there times where they come out down and it seems like they pick me off right at that level? Definitely. But then I have to look at the chart and say, all right, is that a reversal or are they heading back up? I can always buy it back. So the simple rules of the stop loss is, again, our biggest fear is getting picked off. if you get picked off, look at the chart and say, all right, they come back down, take out some stops and taking it back up? If so, buy it back. Because we shouldn't expect results or have expected results from a candlestick chart pattern. And there are times where they come down, pick you off, take it right back up. I've made lots of money by getting picked off, saying a few choice words, and then watch them start taking it back up. And if my 10-minute chart says that they're still buying this, I'll come back in. So I often state that if a price move has 10 points to the upside, and I only get 8 of those points, but each time I'm in there, I know I'm heading in the right direction. Again, the more correct trades I have by getting stopped out when it's time to come out and getting back in when it's time to get back in, that compounding effect is going to be huge compared to staying in a position that you thought you should have been stopped or should have stopped out, and then it doesn't go back up. Well, you're sitting right there with what your analysis told you shouldn't be in anyways. Again, the biggest solution is if you get stopped out, then see what the next what it's doing from there. If I'm in an overbought condition and I'm that far away from the T line, I put my stop at the previous day's open. If there's enough selling strength to come down through there, that tells me that uptrend obviously is over. And where's it likely, when you're that far away from the T line, where's it likely to move back to? At least back to the T line. So I pick out spots that tell me, again, when I got back in, where was the time to get out? Well, there was a doji type day. It didn't close below the T line. But I have a doji day. So where is a simple, logical place to put a stop? Well, if they were able to bring it back down below the low of that doji, I want to be back out of that trade because that tells me they didn't take it up. They're still taking it down after the doji. You can scan only optionable stocks. It all depends on what you want to set your scans up for, or with, if that's the right word. Which means if I'm going to just trade optional stocks, then I make the universe that I'm scanning just optional stocks. If I only want to trade stocks that are anywhere from $2 to $5, then I set up my universe for only looking for stocks at $2 to $5. If I only want to trade stocks that are above $50, then my scan is for all stocks that are $50 or greater. That's true. That's right. JP is saying somebody taped to my screen. I'd rather be out wishing I was in than in wishing I was out. Yep. So when I get out of a trade, I can at least the candlestick signals let you observe the obvious. When has there been a change of investor sentiment? We know there's simple rules. So somebody was asking what the T line is. The T line is the 8 exponential moving average, and it's got a very simple rule to it. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. That has, I used to trade and I would get out when it looked like it was time to get out before we had the T line on our screens, and then eventually would head up further, but I wouldn't be back in because I'd taken that money and gone someplace else. Now I know at least to hold that position until I see a candlestick sell signal and a close back up above the T line. So if I see buying setting up, there are expectations. And if I was buying and the next couple of days it closed back below, I've got a different analysis that instead of this being a slow curve breakout, we're still stuck in this downward trend channel, close out the position. Here's a case where if I got in, I got back out. I can always get back in when it's confirming again to be back in. I took a foolish alert from someone today. It is possible that we could ride out. We are oversold bearish. I took a foolish alert from someone today. Is it possible that we could ride out our oversold bearish engulfing candlestick to just a wave 2 before the big move? Pippi, I have no idea what you asked there. Yeah, bring up the stock later when we get to some live charts. We'll figure that out. So anytime I see a buy signal with it confirming, if it comes back below this level, it's telling me it didn't confirm. So that doesn't bother me anymore. Used to be, man, that was such a good one, and I was sure it was going to go up. I at least now know that at least 1/3 of the trades are going to be losers. And if I can have that in my mind, so if I'm buying something like this, what's my expectation? It's going to at least come back up and test the T-line. And when it does come up and test the T-line, and then comes back down and closes below the candle that told us the bulls there was a reversal, I want to close it right back out again. Okay, we'll take a look at STX later. Yeah, hold on to any individual stocks. We'll try to do some at the end when I tell Rick to do the double line. We also know what should happen after an individual signal. We know that if we see a bullish inverted hammer signal, or see an inverted hammer signal in the oversold area and it opens positive the next day, just from my own research through the last 40 years, if it opens positive after an inverted hammer in the oversold area, the probabilities are probably 95% or greater that it's going to move up. Which means, if that's the case, where is the place you put your stop if you bought it here on a positive open? It shouldn't come back down through this level, because that means that's that small percentage that didn't work, close out the trade. Something didn't work. Arthur, yes, the recordings will be available. There are times when I get out during the day, if I see something, again, if I'm in an overbought condition and they have enough strength to sell back below the previous day's open, I'll close it out during the day. If it's still in an uptrend and it's hasn't traded below the previous day's open, but it's still trading below the lower half of that candle, I'll give it to the end of the day to see what it does. Mike, yes, you can move up your stops, but that's a very simple process of saying, if today the price moved up, where would I have to put my stop the next day to tell me that things aren't working? If I see a doji in the oversold condition and opens positive and I'm buying, it shouldn't come back down below the doji. That tells me that it didn't go positive. So anytime I look at a signal, I ask myself, what should the trend be doing? Why did we analyze where it should be going? What was the reason for it? And what should be done when something alters that trend? And that's close out the position. Okay. Sell when? Halfway down the candle that confirms the buy signal, or halfway down? Usually halfway down on the signal that, well, first of all, if you're buying on the day after a buy signal, it shouldn't close halfway down that candle the next day. Same scenario, if you've got a doji and then a big bullish candle that confirmed the doji, and you're buying the next day, it shouldn't close halfway down the candle that confirmed the doji. So we also use stop losses to protect our profits. Again, this keeps our mental process clear. So if I see something that tells me, all right, we're starting to see indecisiveness up here, where's a perfect spot that would tell me after a doji I shouldn't be in anymore? Well, that's if they could come down through the low of that previous day's doji. That tells me the sellers are now in control. If and notice again, I have the 3T on here. Notice what happened here. If I didn't close out here, when do I close? When I see it close below the T line. The next day they took it down. This is on the 10-minute chart. So this could be a daily chart. This could be a 10-minute chart. If I was long, I'm waiting to see whether they're going to do a J hook or whether they close below the T line. When they close below the T line, I take my profits. That's on an intraday basis. And part of that is if you're trading, I guess this was the 10-minute chart to show this, that if you've got a big, huge move up here, what's our rationale or what's our criteria? We want to sell when we see a candlestick sell signal. Well, there may not be a sell signal here, but if you just gave up half your profits with a big gain, how do you protect that? And that's where you go to the 10-minute chart and say, all right, I've got a huge gain. And what's the other criteria for getting ready to take profits? How far away are we from the T line? Very simple rule. The further away we move from the T line, the higher the probability it's going to come back and test it. Bigalow, I have a very simple process for risk management positioning. And that is if I've got a $500,000 portfolio, a $100,000 portfolio, a $50,000 portfolio, I put on 8, maybe 10 equal positions. That way, each position is a unit of my portfolio, and I don't have to manage it other than if that trade isn't working, I close out that unit and move on to another unit. That way, it becomes it takes all my emotions out of my trading. This was the 10-minute gold chart. There's a nice bullish engulfing. Looks like it's trading positive. Put on the position. Then all of a sudden it comes back and closes below the T line. What's the T line telling me? We're in a downtrend. It didn't break out. Close out the position. I'd rather take a lot of small losses because I want to maintain my equity for when I get to the big gains or have the money for the big gains. So the nice thing about candlestick stop losses is you don't have to worry about formulas. You don't have to worry about price percentages. Remember, very simple rule of the market. The market doesn't give a hoot where you bought. Market doesn't give a hoot what formula you come up for getting out. The market is going to tell you when the uptrend is still in progress and when the bears are in control. So the candlestick signals are the graphics of the most common or consistent indicator in the world. And that's basically human emotions. And if you go back to the very simple analysis that prices do not move based upon fundamentals, prices move based upon the perception of fundamentals, and the candlestick signals are just the graphic depiction of what's going on in investor sentiment. Okay, so with that, yeah, usually at the end of these we have a bonus. So the bonus tonight is you're not going to be sold a thing. This is just education. Rick, I'm going to shut down the screen for a second. And let me bring up the full screen. Oops, not yet. Let's see. I usually try to do that in the videos, Johnny. That when I say you want to buy at 40 and a quarter, as long as it stays above the T line, you stay long. You don't want to see it close back below 39.85 or something. Halfway, let's see, let me scroll up here. Whoops, let me, for example, today we recommended buying wheat. Oops, better bring up the chart so you can see what we were talking about. Well, that's not what, there we go. So today we put out a recommendation to buy wheat if it came up through the 445 level, because what would that candle be illustrating? A doji sandwich. And then we said put your stop back at where it opened, which was, I think, 30 or 434. Because if this was going to work, we had big upside potential, at least back up to this level. If it came back down through the open, what was that telling us about our force? It's telling us it wasn't there. We should be back out of the trade. Same scenario. Was we were recommending, or we didn't recommend, but I was told our futures room, we were buying live cattle on positive trading. So if we were buying it up here, where was the last place we wanted to see it trade during the day? Back below the open. Because why were we buying it? Because we're coming out of the oversold area with a Morningstar signal. A positive open would be doing two things: confirming the Morningstar signal and telling you the T line was not acting as resistance anymore. The T line is the black line. The 200-day simple moving average is the red line. The blue line is the 50-day simple moving average. The gray line is the 20-day simple moving average. The reason those are on the charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. The T line is the 8 exponential moving average. So the reason we tout the T line is because if you look at the concept of the candlestick signals themselves, which is the graphic depiction of what's going on in human nature, the moving averages basically act like magnets, because if you're a major money manager, you're going to wait to see what happens at a support level or at a resistance level at those moving averages. The T line nobody has on their chart. And since it works so effectively, it's kind of got kind of a Fibonacci characteristic to it, which is a natural support and resistance level, like Fibonacci numbers. So if you combine the fact that you've got investor sentiment that's being conveyed with graphic depictions, and you use the T line, which is kind of a natural support and resistance level, when you combine those two, you've got a very logical, high profit, high probability trades situation. In day trading, having a problem distinguishing a second wave of a trend from a reversal signal with the stochastics in the overbought or oversold condition. Bob, you trade it just as you would anything else. This could be a 1 minute chart. This could be a 10-minute chart. It doesn't matter what you're trading. This is the gold chart. And if you're trading gold on an intraday basis, you might flip to the 10-minute chart. It works. It looks just exactly the same. Let's see. Would you be able to suggest a stop when you post your? Okay, yeah, we do that. So this morning, which one was it? Zag. Whoops, 10-minute chart. Zag was very simple. We wanted to buy it on positive trading. We didn't want to see it close back below the 50/T line area. Now that might be a hefty percentage, but we're also playing the probabilities that they gap this up in our best friend signal yesterday with stochastics coming up. The probabilities are pretty strong that it's going to move in this direction. So the probabilities that it's going to come back through here is very small, so or much smaller. So essentially what we're looking at is which way is it likely to move versus which way is it not likely to move. Consistent before you buy, are you considering this a bottom feeding strategy? Some of your examples are with stocks that have a consistent downtrend before you buy. No. As a matter of fact, it's usually the opposite direction. We were going to short. Hold on, I've lost. We were going to short VRX today had it opened weaker. And the reason for that is, notice what the trend is on this chart. It's pretty much a downtrend. Then we had kind of a bearish engulfing after a series of dojis, stochastics up closer to the overbought area. Had this opened lower and started trading lower, where do you think we would be anticipating our next price move? The bottom of this trend channel, somewhere down in this area. There are going to be times when you're buying a bottoming action based upon the signals telling you that it is bottoming, like we recommended YY. It's been in a strong downtrend, but notice what's happened down here. Lots of dojis, now bullish confirmation. And what was the confirmation? Confirming the series of dojis and then telling you which way they're taking it, number one. Number two, notice what the T-line was acting as the whole way down, a resistance level. Now they've gapped it up through that resistance level. That tells me there's been a change of investor sentiment. All right, let's, so when I put out a recommendation each morning, you definitely need to see how it opens. I think we recommended this over a few days back, which looked like a J-hook pattern. This opened positive and started trading positive, which it did. But if you'd bought it on this day and it closed more than halfway down this candle, what was that telling you? That we didn't have a breakout. We want to be right back out of that position. You're not seeing the full screen. Oh, I think it's still some of the buttons that you need to push on up in the top. Can somebody help the people that aren't getting a full screen? LBIO was another situation where we wanted to buy this on a breakout of this J-hook pattern. It opened positive. So if you bought it on this day and it closed back here, a bearish engulfing signal at the breakout level, what'd that tell you? Pretty much told you they had a sell signal up here instead of a breakout. You close out the position. All right, yeah, hit the fit to screen. No. If I'm in a long position, I put my stop at the previous day's open if it's the stochastics are up in the overbought condition. Otherwise, I'm probably using the T-line as my stop. Let's go back to the Dow. Yes. This is what the afternoon comment was kind of inferring. We knew, or we had a good inclination that it was going to break out through this level, this kind of resistance level here. And why was that? Hold on for a second. Okay, sorry about that. Throat was getting dry. So part of our trend analysis is this wasn't a real reversal signal, but it did signify that they were buying at the 200. So where was the resistance levels? Could have been here or at this resistance level. You can pretty much draw a line right down through like this. So that was kind of an obvious resistance area. Well, what type of pattern do we see setting up right here? Kind of our bobble J-hook pattern. So when it broke out, we knew we had another wave to the upside. Is the best friend signal a gap above the T? Not necessarily. A best friend signal is a doji in the oversold area followed by a gap up from that level. You get further confirmation. If it does close above the T-line. So if we saw this J-hook bobble setting up, what do we know about this wave right here? It's going to be approximately the same as this wave right here. Also, what is the most simple analysis that the Japanese rice traders have illustrated for us? And that's basically that most people panic sell at the bottom and they buy exuberantly at the top. So if we know we're up here in the overbought area and they're starting to gap up in the overbought area, what's that tell us about investor sentiment? It's starting to get a little bit exuberant. So there's two factors that's telling us get prepared for some profit taking, maybe back to the T-line, because one, we've got wave 1 and wave 3 equivalent. 2, we're in the overbought area and we're in the have gapped up. We've gapped up in the overbought area. And again, every time we see a gap up in the overbought area, what's our simple rule? Start looking for a sell signal. Adjust my mic. All right, how's that? Sorry about that. We're getting to that one. Next one. APOG. Open positive, did exactly what we wanted it to do, but closed more than halfway down this candle. So where did it close? It closed right back into this congestion area. What should it have been doing? It should have been breaking out. This is where you close out the position. Can you buy it back if it starts back up again? Definitely, but right now, it's not telling you there's any benefit to owning this one. I don't know whether I recommended DDD, but there's that little bobble pattern. But now what are we seeing up here in the overbought area? a doji, and what's this this doji look like? Looks like a tweezer top, almost the exact same tops here. So if it opened lower, probably a good time to start taking profits. Something gets changed in the on your end, or beat was another one that we recommended. Had it broke out to the upside. So what's our simple rule of the doji? Except with this criteria, if it opens positive, it's probably going to trade positive. But when it reversed and did a left-right combo, right at the same place it topped out before, what's that tell us about our breakout? It didn't occur. Close out the position. So I know that every time I put on a trade, or if I put on 10 trades, 30% of them aren't going to work. But what we're looking for is the ones that are going to work. So we get out of the ones that don't work because we're looking at, charts like this, which we call a steady eddy, that we know that coming out of this fry pan bottom and that big move to the upside, we're in a 45 degree until we see a sell signal and a close back below the T line. That's the type of position we're trying to get in. So I always tell, is the mic better at this point? You are getting further and further away. My sound level has dropped. All right. Do you only have a stop loss after the first day and then wait until it closes below the T line? Yeah, if I'm buying, after that, it needs to be a sell signal and a close below the T line. If I'm buying on this day and it closes back here, I'm right back out of the trade. When wave 3 is setting up, let's say in this case, this is wave 1, it doesn't have to be exact. If we could calculate that this was approximately 10 points, we're looking for this somewhere right in here to here, should be about 10 points. Okay, good. Okay, we'll get to, hold on, let me get through some of these that are obvious stop to get out of the trade. Here's another one that if we had started buying yesterday, based on it breaking out through this resistance level, and today it closed back down here, what did it tell us about our breakout? It wasn't there. So what's this chart telling you with it closing right here? It's not going anywhere. Why stay in something that you don't know whether it's going up, down, or sideways? You want to be buying things where we know the probabilities are in our favor that they're heading up. So this one, if I had bought yesterday, I would have closed it back out today. And let me see. This one has something illustrated in it. Oh. And here's another criteria that there's kind of our little bullish harami. It's not a harami, it's the homing pigeon, which is like a harami, just not as strong. And it starts up. Where do you think the first target's going to be? Up here to the T line. And as soon as we see it's failing at the T line, I'm going to close it out because we don't know whether it's still going to be in a downtrend. Where do we want to buy it? Well, there was another inverted hammer and it closed back up. We can always buy it back here. So giving up this to this is just insurance that we're not holding on to something that's heading back down in this direction. On beat, yes, if I had bought it here and it closed down here, I'd have closed it out. Because what signal do I have right now at that point? I've got a bearish left-right combo. And if you look at the video on the quantified signals and patterns. The best friend is probably your top one. The left-right combo is right behind it. Then you've got the kicker signal. So a lot of people ask what signals are better than the others. And the answer is they all are good based on what conditions the markets are in. But then there are some that you have a much higher probability, like the left-right or the best friend signal or the left-right combo. Let's see. On STX, I forgot what the question was. RAM, the three-wave pattern is nothing more. That's the J-hook pattern. Is nothing more than which one was the J-hook? Yeah, even the Dow. That wave 1, wave 2, wave 3. Now everybody says, oh, is that the same thing as Elliott wave? No, Elliott wave says, at least told us there are waves in the markets. We don't really care. We're only interested in what's going on right now. Wave 1, wave 2, wave 3. If it pulled back again, that might be now wave 1, wave 2, wave 3 from that point. On STX, yes, but I would be more inclined to think that there's your trend trajectory. There's your best friend signal. I'd be more inclined to think that you're still in a 45 degree from this point. Okay, so that's kind of the analysis of the stop losses. That you use a point. I mean, it's just very simple. You use a point. This example looks like wave 1 to me. Well, you can also consider it wave 1, wave 2, wave 3. At this point, probably wouldn't want to see it now close back below the halfway point of this candle. I'd probably take my profits at that point and then just wait to see what it does when they came back to the T line. Thank you, Rafa. Okay, here's a few that, again, a lot of the ideas that are good ideas come out of the chat room each day. And that's because we got so many people looking for the same type of patterns. OOPT or OPTT kicker type signal that broke out to this level. So where would you buy this? I mean, is it too high to buy it here? Is it high buy here, here, here? Well, that's again where you go to your 10-minute chart. If I was looking at it, I might not buy right here, but I'd buy right here because I had a little J-hook pattern. Might not buy here, but I might buy here. Now, with it closing off at the end of the day, it doesn't really bother me because what happened by the end of the day? We could see we still had a big bullish chart getting ready for the next day. We recommended ZAG. Again, that was very simple. There's our best friend signal, a doji followed by a gap up. And so what's our criteria now? Well, we've broken out through this level. I would suspect at least a 45 degree with the potential of coming back up to this area, which would give you a good 30, 35% upside. These are the type of situations you want to get into. This is what we call the steady eddy. Notice their best friend signal right here. And what was our criteria after that? You just stay long until you see a sell signal and a close back below the T-line. Mario, no, it won't have any effect on the market. It might have effect on things like Smith & Wesson. It might make gold stocks a little bit stronger. But as far as the overall market, nothing, I don't think you're going to see any major effect on the market. If you stayed long on OTP, OPTT, very simple. If I stayed long, what do we want to see the next day? We want to see it open positive and start trading positive. If it opens lower, what's that kind of imply? That there's profit taking going on. I close it out immediately. If it comes down through here and then turns around and comes back up through the previous day's close, that means the profit taking's over. They're starting to buy again. So I'd rather close it here instead of holding it all the way back down here and be ready to buy it if it comes right back up through the previous day's close. No, there's just 12 major signals. The homing pigeon is one of the 50 signals or 60 signals that's not as prevalent. The benefit of the 12 major signals is that they work, and you will see them probably 99% of the time. If you see something like the homing pigeon, it's not going to be very often, but you at least. So what I tell people is, instead of using up your mental time and energy learning all 50 to 60 signals, which most of them you'll never see, learn the 12 major signals. And once you learn the 12 major signals and recognize them and understand that they understand what created them, now you've got the same grasp on price movements as somebody that's been trading for 50 years. It's just common sense built into a graphic depiction. No, the answer, somebody says, is still time to buy CDE. Now, this is the problem that a lot of investors run into. It's a good chart, but now you hold it because you're up in the overbought area. This was the buy area. This is what you kind of look for, is these type of setups so that you get this type of move. A lot of people, and this is where, remember what the Japanese rice traders told us, where do most people buy? They buy exuberantly at the top. That's because everybody gets confident the longer it keeps moving up. We know that if you start seeing exuberance at the top, we start getting ready to take profits. Pippi, I don't use weekly charts. If I see two good-looking charts, then you might flip to your weekly chart and see which ones have the better weekly charts. Can you start to short here? No, there's nothing to tell you there's any selling going on. For all you know, this one could go to $20. Yes, there are scans for the best friend signals. Very simple. Doji in the oversold, preferably in the oversold area, followed by a gap up. Yes, and you'll get, this is what we're looking for. So what I described to our chat room is that if you have 10 positions on, which I don't try to have any more than that, because I don't want to spend all day analyzing what to do with my charts. But if I've got 6 of these, I know I don't have to analyze them. All I have to do is look at them and say, nothing here until we see a sell signal or close below the T line. That means I can put my more time and effort into the other charts. Hold on to the individual stocks. Let me finish up a few here, and then I'll tell Rick to do the double line, and that's where you can type in a signal and just kind of just use one symbol tonight for each person. Looking at PRTA, because this is your typical bobble pattern where they hit a resistance level, they bounce down to the next support level, the T line. You can buy it as soon as it comes back up through that level. It'll be a J-hook bobble, and the bobble basically is using a resistance level and a support level to tell you what it's doing. the Kendai doing a doji. If it starts trading positive tomorrow, you can be buying it because that's exactly what the best friend signal told you today. Remember, knowing what should happen after these type of movements just puts you in situations where the probabilities of being in the right direction at the right time is greatly in your favor. Here's a big fry pan bottom. And notice what's happening over here, right about where this fry pan bottom started. You had a kicker type signal and a trend kicker. And what's our strongest, one of our strongest signals is that trend kicker signal. I'd look for more upside. Where's your upside potential? Back up here to fill the gap. Should what, Pippi? Another breakout on LFL, one of the airlines. There's your message. Notice how when they opened it, they sold it off. The next day you had your bullish harami. What'd that tell you? The selling had stopped. The message told you there's going to be more upside. What should happen? Yes. The whole reason we're looking at candlestick signals in the first place is because the Japanese rice traders over 400 years have identified what usually happens based upon human nature that creates these signals. Here's another setup for a bobble pattern. Failed at the 200, bounced down to the 50. If it comes back up through this level, you've got a J-hook bobble. If this is wave 1, wave 3 should take you back up to test the recent highs. Form. Yeah, that's why, again, you want to see what happens at the end of the day. Here's wave 1. Here's wave 2. Where's our analysis? Wave 3 may only be 1/3 of the way through. But where's our sell stop? We don't want to see it close back below the T line. As long as it stays above the T line, the probabilities say you're still in an uptrend. Seems to be a good example of sell stops for those who bought only 3 or 4 days ago. Well, yeah, this was coming out here. Still use the still use the T line as your stop. And WPZ, this one is a slow curve. It's telling us that it's getting ready to break out. So this is something just to keep an eye on. And one more, gel. Notice where we are, fry pan bottom. And one thing that we point out as far as a fry pan bottom, notice this right here. It's kind of a dimple. So, and the dimple tells you one thing. The halfway point is usually from here to here, will be equivalent from here to here for the breakout. So if this opens positive tomorrow, good probability you're going to break out and come back up into that trajectory. Okay, let's see. So a lot of people had been following gold. Notice we had a left-right combo up here and a close below the T-line. Stochastic's heading down. Looked like they were trying to take it back up today, but we're still heading in a downward direction. But on Forum, you had a doji at the top and traded lower today than yesterday. So would you not have closed out? You could have. Which one? Forum. You could have closed out here. So that would have been a toughie. Still, I would be analyzing that I'd probably hold this long position. So this is, again, exactly why you want to use the double criteria. I want to see a sell signal and a close below the T line. Otherwise, The uptrend is still in progress. If you're trading this on a faster trading basis, yeah, you may have closed out half the position today to see whether over the next couple of days they're going to bring it back down to the T line. Okay. Are there any general questions on candlesticks? General question about belt hold versus long-legged doji. Stick length and close the same for both. Its interpretation, buyer-seller psychology the same. Does the long-legged doji interpret as sellers gone as belt hold? No, let's see. A belt hold is something like this, except a belt hold is where you see a significant move away from the trading range and it comes back up into the trading range. Basically, what it tells you is they've wiped out a lot of sellers, but the bulls are still in control. A long-legged doji tells you there's great indecision, and I'm trying to think of which one might have. I'll try to find them. Find some as we go through. The gravestone doji at the top is just like the ultimate shooting star. Again, it uses the same criteria for either, whether it's a shooting, you want to call it a shooting star, or a doji. If it opens lower, the next day you take profits. Okay, Rick, I can see everybody's still putting in suggestions, so go ahead and do the double line. All right, try to keep it. And do the second double line. LRCX, there's your left-right combo. Makes it very simple. Your stochastics are just getting up to the overbought area. However, if it opens lower tomorrow after left-right combo, more than likely they're bringing it back down to test the T-line. I'd take profits. To stay long, you definitely want to see it open positive and trade positive. Western Digital, same scenario, but notice where it opened. Right at our first target, the 200, and did a selling signal. If it opens lower, where do you think it's moving back to? Back to the T-line. Then you can see whether it's going to do a bobble pattern, which basically is your J-hook pattern, coming back up through the 200 the second time. So if you own it and it opens lower tomorrow, you close it out. If it bounces up off the T-line, you get ready to buy it back if it comes up through the 200. To you, as you can see, once it broke out, it's moving sideways, waiting for the T-line to catch up. At this point, I would have a sell stop below this level, which would tomorrow be below the T-line. If it moves in that direction, it tells you which way they're going. You can stay long on this as long as it stays above the T-line. CUDA, stay long. It's in the 45 degree. You stay with it as long as you don't see a sell signal and a close below the T-line, except the further away you get from the T-line and you see a sell signal, that's when you take profits because they'll come back and test the T-line. TXMD, nothing here. If you're short, I'd be ready to cover the short position on a positive open tomorrow because your stochastics are in the oversold area and you're seeing a bullish harami. Whiting hasn't been able to really get started yet, but it did the little kicker signal right here. So if it starts trading positive from here, at least you know your first target is probably up to the moving averages. SGY keeps moving higher. It's getting a little bit iffy here. Again, I would probably on the next sell signal, if it opened lower tomorrow, I'd probably take profits with the anticipation it's going to come back and test the T-line. If it does, you wait to see if it supports there. because I would think the 200 is still a likely target. And FSM, stay long as it stays above the T line. Nothing wrong with this one. We're still holding this one. Weibo acted well today. Just stay long. It's in that 45 degree. Potash isn't very exciting. You can see there's really not been any trend to it. But if you're long, you just wait to see what it does once it gets up here to the 200. CNX, nothing to do here except stay long. Cypress did the message. If it opens lower tomorrow, I'd take profits. What you want to do is see it open and start trading positive, putting you in the 45 degree. Cree, another one that more than likely is going to be in a 45 degree, the same trajectory as what it was prior to the consolidation area. CUDA earnings, we're on the 7th, all right. So remember, these gap ups are, people say, well, it doesn't matter that the gap up occurred because of earnings. No, gap up occurred because investor sentiment changed dramatically because of the earnings. How many times have you seen great earnings come out and the stock immediately heads down? Or you see terrible earnings and the stock goes up? Remember, we're buying based upon what human nature, what investor sentiment is telling us. Intel, usually not a very exciting stock to trade, still isn't. But right now, if you're long, notice how far away you've moved from the T line. Pick a spot that says they shouldn't be trading back below, let's say, the low of this day, because if they do, after a couple of dojis, that means they're probably coming back to test your T line, and that's also going to be a function of how the market's open tomorrow. MCS, kind of a little shooting star doji. Hey, Victor, how are you doing? If it opens lower, it's probably coming back down to test the T line. And Milam, looks like it's having a hard time getting through the 200. If it opened lower, I'd close it out if I was long, because you can see that you're stuck in this sideways channel. Fang, nothing here yet. You can see you've got a fry pan bottom with a dimple. So if this is the first half, the second half is still somewhere over here. So I wouldn't be long, but if it broke out through this level over the next week and a half, then your fry pan bottom breakout has occurred. Cliff, just stay long, but notice you had a gap up, doji, hanging man, spinning top. Put your stop below that low. If it comes back down through there, that tells you what they've done after they've gapped it up in the overbought condition. AT&T is about as slow a moving stock as you want to look at. But if it's if you like it, you can be buying this one on a J-hook type pattern. It's just not going to produce a whole magnitude of return for you. Tazar, stay long as it stays above the T line. ZB, not found. Silver, just stay long as it stays above the T line. Amazon pulled back. It has to stay above the T line to do a setup for a J-hook pattern. And Yard did a bearish harami. If it opens lower tomorrow, you close it out because it's coming back to test the T line. Meat, stay long. Don't let it close below the T line. Goog is a tough one to trade, but you can see it's hit the first or a major resistance. Hanging man in the overbought condition. If it opens lower tomorrow, take your profits because at least it's probably going to come down and do a bobble back to the 50/T line area. Silver trust, stay long as it stays above the T line. Crude oil. This is the August contract. If you're short, you can stay short. I wouldn't be trading it because you're in the oversold area, you've found a support level, and it's really not moving one way or the other. I am pretty convinced that crude oil is going to start trading between the 45 and, say, this area, the 52 area. The longer it does that, the more the individual crude oil stocks will pick up steam because it shows that their inventory isn't depleting as far as market value. Pro should have been closed out today with it closing below the T line after a left-right combo yesterday. And G Pro getting a little bit soggy. You can stay long. I would use this low right here, but if it came back down through there, it's probably heading back to the T line. American Barracks, you shouldn't be in it yet, but you do have a bullish left-right combo that if it comes back up above the T line, you can start buying it again. Babcock and Wilcox. This is why you want to watch to see what it does once it gets to the T line. Did a little kind of trend kicker. You can be buying this one on positive trading tomorrow. Then just use the T line as your stop. Deere. Deere is not a very exciting one to trade. Really no direction to it. And even if it bobs from, I guess it's a 10% move. If you like it, you stay long, but figure you're in this trend channel. So you still got, if you're long, you still got 5% to the upside. Verizon. Looks like it's trying to do a J-hook pattern. And IPI. Oh boy. The skunk is back. Not a real best friend signal. Best friend signal. Hold on for a second. The skunk's out back and it's stifling. Hold on. Oh man, enough to knock a bucket on the honey. Sorry about that. When I open or look out the back sliding door here, there's usually 5 or 6 raccoons eating, at least 1 or 2 possums, and the skunk. And I think sometimes the skunk leaks because it just becomes stifling. It's hard to even breathe. Got one skunk that is completely white on the top. No black, a big fluffy white. And then we got another skunk that is probably about 98% black, with just these little white spots on it every now and then. So what do we do? IPI. Yeah, it's not a best friend. It's more of a doji sandwich. So if you're buying this one, look for it to come back up to the top of the trend channel. Oh man, it's hard to breathe with that smell. Let's see, we did Amazon. Amazon needs to stay above the T line. Dollar Tree, still in this steady eddy, 45 degrees as long as it stays above the T line. DNR, nothing to get real excited about here. This is a perfect one that with the buy signal and trading positive the next day, should have closed it out here, and you shouldn't be back in it until you see a buy signal. SNDL, uh-oh. Did I do that wrong? SNDL, oops, that's not the right one. Silver Wheaton, just stay long as it stays above the T line. AEM, I keep forgetting about this one. There's another nice steady eddy as long as it stays above the T line. What would be an adequate stop for getting into an existing trend? Still the T line. If I was buying this one right now, obviously it's moved way up. I would continue to hold it unless it closes back below the T line. The T line's just a very high probability indicator of human nature. So there's a lot of times we'll stay in a 45 degree with a simple criteria that we stay in it as long as it doesn't close back below the T line. As you can see, FEYE did a left-right combo when it should have been breaking out. Very simple. If you're long and you stayed in it today, it has to open positive and trade positive to stay in it. If it opens lower, close it out immediately. Well, yeah, it's they're different things. Cow is the ETF for trading cattle, and this is the August contract, which is a little bit more bullish. I mean, there isn't any direct criteria. SDLP, you stay long. Again, there's that fry pan bottom with the dimple being the kicker signal starting you back up. And NVDA, just stay long. Notice a little scoop pattern. Just stay long. At this point, because you've moved away from the T line, I'd probably use today's low. If it came back down through that level, I'd probably take profits. All right. Goldman is hard to trade just because it's not very percentage-wise active, but as long as Goldman stays in an uptrend, the market is probably going to stay in an uptrend. And Delta, you can stay long on this one. Notice how they came back up above the 50. Move. Yeah, the ag vector to stay long. Yeah, there should be a link tomorrow for the recording. Bank of America is not a very exciting one to trade just because of the lack of magnitude of movement, number one, and the lack of trend. Nugget was trading up today, but gold is trading down right now. As we see on the gold chart, it's still backing off. It tried to bounce today, but nothing yet. So I'd say, yeah, we're not trading Nugget because there's no direction to it. SNX, just stay long. ALKS. It's in the bobble. As long as it stays above the T line. Now, the best place to buy this now would be when it comes back up through the 50 or through the 200-day moving average at $50. That's when you want to buy. That's where your high probability J-hook pattern. NTSFF probably won't come up on this one. And SPLK looks like it had a hard time getting through this level. If it opened lower, tells you you're still in this sideways trend. I'd come out of it. Yeah, I don't think we had any skunks at Cuca Lake, but yeah, it's stifling right now. The cat hopefully is inside. Spider bite has cleared up. Yeah, it's not quite an albino, but it's all white on the top. And usually I have to go out to the barn at night to close it up. So I have to walk out through the pool area, but I make sure I make enough noise. Not that I don't want to scare the animal, I just don't want to scare a skunk too close to me. Blackstones, watch to see what it does once it gets to the 50. And the biotechs are having a hard time getting through this downward trend channel. It's still above the T line, but it needs to show a strong reversal to get back up through that resistance level. UEC, nothing there. Wouldn't be long or short. Valero, you can start thinking about buying this one. Obviously, you've got this downtrending channel that you've got to contend with. And then IOC is the one that we recommended a while back because it's got that best friend or the gap up 45 degree. No, the skunks just, or the raccoons don't seem to bother them a bit. Every time you buy into a steady eddy, you have to kind of calculate that it's got to stay above the T line. You're usually trying to find, you're not buying a steady eddy knowing that it's a steady eddy. You're buying a chart that looks like it's a good strong chart and then turns into a steady eddy. No, the daily chart. If you're trading off the daily charts, the time that you sell based upon the 10-minute chart is when your daily chart is way, way above the T line. Then you flip to your 10-minute chart. When you say close it, if it opens lower, do you mean lower the first minute, 5 minutes, 30 minutes? Usually within the first 2 or 3 minutes, you're going to see whether they're taking it up or taking it down. So, and you're going to get a little bit of an inclination of which way they're moving it based upon how the pre-market futures are showing for the general market. And you can usually see how they're going to, what the bid and ask is a few minutes before the market opens. What did I just do? Joe, another one. Notice how it's gotten to the top of this channel. Now you have a bearish engulfing. If it opens lower, it's probably coming back to test the T-line. Southwestern Energy, nothing here to get real excited about. Just kind of sideways. You can trade whatever time frame you want to. So somebody said the 30-minute. I trade off the 10-minute chart. So yeah, you can trade. Some people trade off the 1 minute, 5 minute, 10-minute combinations. Other people trade off the 5 minute, 30-minute, hourly combination. Yeah, coffee. Whoops. That's the ETF for coffee. And that's the September contract for coffee. Okay, I guess we got most everything. Let's see. AMAT. Notice the bullish harami right off the 50. The breakout of this level. Now you've got a doji. Use today's low as your stop. Yeah, that's kind of bad what happened over there tonight in France. I've got some fraternity buddies and his family over there. Just hoping they weren't close. I did NVDA. The ETF for coffee is Joe, J-O. Yeah, I can't even take a breather, Paul, because it smells like skunk in here. You said to stay long as the price doesn't close below the T-line on AEM. But 2 days ago, it did close below the T-line. Therefore, we should have gotten out 2 days ago. Notice what the criteria for this trend has been. If it had closed there, then I would use the criteria that it would have to open positive and trade positive to stay in it. If it opened lower, you close out the position. So, and that's based on what's your overall trend. Pretty steady Eddie. Okay, with that, yeah, I've got to get my respirator going. I just got my 55 Packard back again, and I'm going to practice painting it. So with that, everybody have a good evening. We will see you bright and early in the morning. We'll see you then.